Hello, guys. How are you doing today? It's indeed a pleasure having you here. And of course, we're here to talk about the business and how to improve in your trading. Today, we're going to be looking at five ways to avoid unnecessary losses during high impact news period. If you notice, we said avoid unnecessary losses. What does that mean? That means that you are going to still have losses, but you must know how to avoid the unnecessary ones. And we're talking about during the period of high impact news. High impact news, the likes of the non-farm payroll, the likes of the CPI, Consumer Price Index, Producer Price Index, PPI, the FOMC, Federal Open Market Committee, and a whole lot of those high impact news. Now, before we dive in, quickly a disclaimer for you. This business carries a high level of risk. So you must always ensure to protect your account before thinking of growing it. And also note that the information we're giving you is strictly for educational purposes. Now that we're talking about high impact news, I want to first of all take you to the news that we have coming out for this week. And if you look at what we have right in front of us, we have a whole lot of news. And when I say a whole lot of news, you can see we only have red here. That's simply because we have turned off the low and medium impact news. These here are the high impact news, and you can see them all in red all the way down. So these are the ones that can cause serious volatility in the market. These are the ones that can cause serious damages to a trader's account. As a matter of fact, this is more or less the biggest problem that traders are facing. They don't know how to avoid unnecessary losses. And then before you know it, too many unnecessary losses would end up eating into your profit, end up eating into your account. But once you can solve this, once you can tidy up this aspect, trust me, your trading will catapult to the next level, right? I repeat, your trading will catapult to the next level. So if you look at the news that we have in front of us, you will notice something that we have high impact news for USD, right? Which is today, August 1st, right? Happy New Month, by the way. And then we have news again tomorrow for USD. That's Wednesday. On Thursday, we have news again on Thursday, and on Friday we have news again on Friday for the USD. That means that throughout this week, practically we have news coming out for the USD. But then traders, they see this as an opportunity to place trades in order to make money. But they are forgetting that the first thing you need to do is to protect your account, is to ensure that you avoid unnecessary losses. Now, the first thing I want to explain to you that you need to do, is a thing of need that you need to do, especially when you don't have any directional bias. The first thing for you to do is not to trade. You don't have any directional bias in the market. Your analysis has not come true yet. Do not trade. Walk away. Stay away from your system. This is one thing that traders find difficult. They always want to be in the market. You don't have to be in the market to call yourself a trader. That's one thing you need to understand, right? A trader is one that waits for the best of the best opportunities to come, right? So stay away from the market, especially during high impact news period, and there's no directional bias, no signal whatsoever based on your analysis. The second thing you need to do is to wait. Wait for price to get to your area of interest. I'll give you an example. Most times traders, and I'm going to switch over to the charts now to give you this example so that we understand it better. Most times when you get a news like what we have in front of us here, this is the dollar index, the DXY. Most times when you have a news telling you, okay, it is time to buy the USD. Don't forget we have a lot of USD news coming out this week. This week happens to be the first Friday of the month of August, so we have the non-farm payroll as well. So you have news for the US dollar now telling you to buy, meaning that you should buy the USD. And immediately the news comes out, you start clicking on buy where the price is. This is wrong. You're supposed to wait for price to get to your area of interest. And your area of interest when you want to buy is here at the area of support. So you're supposed to wait for the price to come down. And that's why many a times when people rush into the market here to buy because of the fundamentals, because of the news, high impact news, because they know that the volatility is going to make the market to move in a very fast paced manner, they want to quickly capitalize on that. And then lo and behold, the market goes down, and then they are saying to themselves, it's like the market is watching them. The broker is watching them. The broker is not watching you. The market is not watching you. You are the one that is not watching what you're supposed to be doing. You wait for the proper area for price to get to the proper area of interest before you enter, right? And that is something that is very, very important. The next thing, right? The next thing that traders need to do in order to avoid unnecessary losses is to wait again. In this business, there is a lot of waiting involved. There's a lot of patience that you need to exercise. So you need to wait for price reaction before you enter. Most times, price could get to that your area of interest and then blast through, right? Like this chart, once again, price could easily do something. Now you are waiting for price to get there for you to buy. And then the price starts to go down. Remember, it is high impact period, volatile period. So you could have big candles just like this, right? And then before you know, you have a big candle that smashes through that area. And then uh, uh, because you didn't wait for proper reaction of price, you set a penny order here, and then it took you out, took out your stop loss very fast, and you had a very fast loss. But when you wait for the reaction, trust me, price should react in this area, and then it will give you, the heads up. It is time to enter at that place. But most traders are what? Most traders are rushing today, which is not the way to go. I repeat, it is not the way to trade. So you need to understand these key things that we are mentioning. They're good, and you need to do what? You need to put them into practice. Don't forget, we said what we're doing here is strictly for educational purposes. So that means that you need to put all of them to practice. The fourth thing you need to know in order to avoid unnecessary losses is to ensure that you use a stop loss. I don't know how many times you must have heard this before, but then some traders still trade without stop loss, especially traders that are scalping. Traders that are scalping, they don't have time to put stop loss. But then you want to scalp during high impact periods, that is a big no-no, because the volatility at that point in time would make the market to move very fast, and then you record plenty of pips. Even depending on the instrument, imagine trying to scalp, as an example, you're trying to scalp gold and you're trying to use 10 pips or 5 pips on gold during high impact news period. I'm sure where you are, you heard what I said, you are shaking your head, and you know that that is a destruction, that is another account blown. And traders are blowing accounts on a daily basis. As I'm saying this, I'm sure somebody is watching this that has just blown an account. So use a stop loss. Make sure that you even set the stop loss in the proper place. Make sure a stop loss is on your chart. No mental stop loss. Mental stop loss means that is up there in your head, but not on the chart. The chart, the broker will not know where your mental stop loss is, and then it continues to go against you if it is going against you. And then it means that you are losing more and more and more. And then finally, number 5, make sure to calculate your volume, your lot size appropriately based on your account balance in order to minimize your losses, in order to minimize your risk, to avoid unnecessary losses at the end of the day. These are the 5 key things that we need to understand in order to become better traders at the end of the day. Trust me, by the time you solve these things, you will see your trading catapult to the next level. And that is very, very key, very, very important. Now, with what we've said now, from everything that we've been discussing, where we said, number 1, you don't have any trade, you don't have any analysis, no directional bias. What should you do? Don't trade, walk away. And then number 2 is what? Number 2, you ensure that you wait for price to get to your area of interest, wait for price to get to your support if you want to buy, wait for price to get to your resistance if you want to sell, and then wait for a reaction. It's always good to wait for a reaction. It's that reaction that you could easily get your entry trigger based on probably the likes of the hammers, pin bars, engulfings, and the likes. And then number four, use stop loss. Very key, very, very important. For those that have crashed one account or two accounts or a number of accounts, you would understand the importance of stop loss. Finally, number five, calculate your volume lot size appropriately based on your account balance in order to avoid unnecessary losses. Don't forget, avoid unnecessary losses, which simply means there won't be loss, which simply means that there will be losses, but you can avoid unnecessary ones. Very key, very important that you understand that statement. I repeat, there are going to be losses when it comes to trading, but you can avoid unnecessary ones. Now, with that said, I want to say thank you guys for tuning in. Thank you guys for staying and listening to what I had to share. And if you found this information, if you found it worthy of your time, you can share it with others. If you are new to the channel, hit the subscribe button, turn on the notification bell for other educational videos where we'll be talking about other aspects of the business to help you out. So I want to say thank you guys for joining me. Enjoy the rest of the day. Don't forget this week, even next week, and so on. You're always going to have high impact news. So you should always know how to approach it at the end of the day. Okay, thank you guys. Enjoy the rest of the day and goodbye for now. Cheers.